What's going on, guys? This is the Passive Wealth Strategies podcast. Thank you for tuning in. Today, our guest is Travis Watts. Travis is a full-time passive investor, but he wasn't always a full-time passive investor. He used to be an active investor. And today, we're going to talk about his story to becoming a full-time passive investor through the FIRE movement, through working hard, through pursuing higher income and really, going through the ringer. This guy put in the work, and he still puts in the work. We recorded this at 7 a.m. my time Eastern, and he lives in Denver, so it was 5 a.m. his time. He's a full-time passive investor, still getting up at 5 a.m. That's incredible. He has also taken on new gigs in the real estate syndication industry. So even though he's a full-time passive investor, he's still working hard and just hustling, putting in the time. So today we're going to go through lessons that he learned through the FIRE movement, what the work that he did to become a full-time passive investor, what he's doing moving forward through all of these economic tough times, and just so many great lessons. This guy's really sharp. Had a great time talking with him, and you're going to have a great time listening. You're going to learn so much today. So thanks for tuning in. For those of you who do not know, I'm your host, Taylor Loft. I'm a real estate investor, real estate syndicator. I buy real estate with passive investors and share the return. Happy to be talking with you today here. I hope you're doing well throughout these economic and pandemic tough times. Thank you for tuning in once again. Without any further delay, here is our interview with our guest, Travis Watts from Ashcroft Capital. Travis, thank you for joining us today.
Oh, sorry. Hey, we're going. I'm here. Thanks for having me.
I know you're here. We've been talking for a little while, so that's great. So for the folks out there who don't know about your story, can you tell us about Travis before we get into talking about what we're going to talk about?
Oh man, crazy background, but went to school for audio production, live show production. Wanted to basically be a sound mixer and travel with bands and things like that. I was a drummer in a band. I was a singer in a band. So started out kind of on the music path. Ended up working for Walt Disney World, which was a crazy transition. And wasn't getting paid enough there, wanted to get involved with real estate. So ended up taking on an Oilfield job where I worked 98-hour work weeks in the States for many years, away from home mostly, as I kind of got into single family homes. And I did some fix and flip, some buy and hold, some vacation rentals. I did house hacking. I did the BRRRR strategy. I did a lot of stuff actively on the side of working those 98-hour work weeks. So it quickly became an unscalable model. It quickly started closing in on me to where, I didn't see a future in doing that particular model. So I had to go back to the drawing board, get educated again, and find a passive path to real estate, which led me to apartment syndications. And as I started selling off my single family portfolio, getting more into the passive multifamily, I shifted gears and I left the oilfield career to pursue work that was more meaningful to me, things that I actually was interested in and wanted to learn. Went to go work for a large brokerage firm, got a Series 7 and 63 license and thought I wanted to kind of do stocks, bonds, mutual funds. And I guess my thinking with that was if I had real estate down and then I had that down, I would be some kind of financial guru.
Yeah.
And didn't really pan out quite that way. So went to go work for a small syndication group to kind of learn how multifamily works from the inside out. And that kind of led me to working with Ashcroft Capital, which I had been investing with for many years. So now I kind of work in investor relations capacity, where I do a lot of live events and speaking engagements, and I just help people understand passive income. And I'm a huge advocate for self-education and just kind of spreading the word on what syndication's all about and, who that might be right for. And that kind of takes us up through today.
Nice. And you're still, you're in Denver. We're talking at 5 a.m. Denver time, full-time passive investor, still getting up early. on Good Friday. So good for you. You're a hard worker. So, I recognize you for that. And
yeah.
making the transition from active to passive investing is really, what a lot of people have in mind. They want to build that passive income. That's what we're all about here. So, what was that like? I mean, it's kind of the holy land, right? It's what you're there for. But it almost sounds like you didn't, when you were in the process of making that transition, you might not have even realized that was pretty immediately ahead of you. Is that right?
Yeah, it's kind of funny, right? Because I read a lot of the books that most people probably read when they get into real estate. I read Rich Dad Poor Dad and, Cash Flow Quadrant and all this kind of stuff. I started realizing the power of being an investor and being passive, but I didn't exactly know how to get there. I didn't have a mentor. I didn't have a lot of great resources, to be honest with you, to go by. I just kind of was trying to figure it out on my own. And in hindsight, looking back, it's like, why was I doing fix and flips? And why was I doing vacation rental? Like this stuff wasn't passive. And I did have a goal of being passive. So it just took that extra push of education to, kind of open the light, so to speak, so that I could get involved with that stuff. And my big pivotal year was 2015. I set out, this is where I was kind of having this not really a breakdown, but I was realizing that single family wasn't gonna be my thing, and I didn't know what to do. So I made a goal that year. I've always been a reader. I love books, and I made a goal to read 52 books in 2015. So that's one book per week, and I did it. And so most of those were, I like reading nonfiction stuff, self-help and self-education. So a lot of that stuff was real estate and things like that. So that's where my mind started opening to the possibilities of passive income. And I made a complete leap over the next year and a half into multifamily.
Awesome. And I think to really, flesh that out, we need to know what your life was like in 2015, and we need everybody out there to know. So
yeah,
what were you doing in 2015 with the rest of your time?
2015, so the year prior, so I guess we got to start at 2014. I made a big shift from working domestically in the US and the oil industry to working overseas in Saudi Arabia, completely away from home and without a cell phone. I did have email communication, but when you self-manage your portfolio and you've got a handful of tenants, obviously things come up, issues happen, and I'm just clearly not there to address them. And I didn't want all my money sucked up through a property manager. So I'm still trying to make it happen. So I'm dragging in, my family and my dad and my mom, my girlfriend at the time, who's now my wife, my friends, can you run over and collect this check for me? Can you go deposit this? Can you go fix a sprinkler head? And, I'll give you $100. And it's ridiculous. It was ridiculous. And of course, none of them appreciated that time period. And that's kind of where I felt like it was closing in. And I thought, oh my God, if I only have this many properties today, how am I going to double that? How am I going to triple that? Or even, and so my first step was to put a property manager over these, and all but one, I think. And I did that, and it still wasn't passive because, I still had to address issues, right? Just, when a roof needs a replacement, right? I can't ignore that. I mean, I still get notified of it or whatever it is. The HVAC goes out, and what do you want to do? Fix it, repair it, replace it? I mean, it costs money. I got to make decisions. So it was making it even worse. It was like having one more layer of communication on top of my tenants, on top of the issue. So that's where I started getting all this pressure and the stress of, what the hell am I going to do? And I just wanted to honestly get rid of all of it. I just wanted to eliminate that from my life. And so I don't want to deal with real estate. And that's what prompted me to start self-educating. That's why I set the goal in 2015 to basically figure it out. I said, you got to figure it out. There's a way people are passive. I don't know how they do it, but people do it. I know people do it. Robert Kiyosaki does it. How's he passive? So that's where I learned that even people like Kiyosaki do syndications. And so it started really opening my eyes as I started self-educating.
Nice. So how did the FIRE movement, for those out there who don't know, financial independence, retire early, how did that factor into your education process? And was that a part of your life when you were an active real estate investor, or because it's pretty big, people might be aware of it. How did that impact your life and your investments?
Yeah, the FIRE movement is a huge, foundation to everything I've ever done. Now, here's what I want to say about that. I didn't know a decade ago what the FIRE movement was. I'm not sure it even existed. It did in some capacity, but it wasn't probably called the FIRE movement. But here's how to paint that picture, I guess, is I was brought up by two very frugal parents. Coupons on everything, buying off brands. If you don't need it, don't buy it. Let's go to 5 grocery stores and buy what's on sale at each one. I learned a lot of different ways to get good with budgeting, living below your means, making the best of what you have, all these kinds of concepts. And I'm very thankful for that now. I didn't realize what impact that would have, throughout my life. But the FIRE movement, for anyone not familiar, is basically this idea that you make as much income as you can possibly make for a period of time doing your highest and best work. For some people, that's doctor, dentist, whatever they went to school for. For other people like myself, I ended up getting involved with the oil industry strictly for the pay. It's not that I was destined to do that. I hated that work. It's terrible work. Anyone that's worked in the oil field knows it's just crappy work. But I did it because it was a 6-figure opportunity. And meanwhile, I was house hacking. I was living below my means. I mean, I had hardly any overhead. I was still eating ramen noodles. I made the money. I just wasn't spending it. So I was taking that difference between what I earned minus taxes, how I lived, that margin in between, and I was putting that all into real estate. So it was 1 property, then 2, then 3, then 4, then 5, then 6. As I kept earning that income. And then, I built up a nest egg of equity. So around 2015, when I sat down to calculate, and theorize, what if I sold everything? What if I took all my single family homes and I sold them in the house I live in, and I sold it and I paid all the taxes and the realtor fees and commissions? What do I have to work with? What's my net worth? That's basically what I was calculating. What's my net worth? When I figured out I could take that amount, invest it passively in syndications and or some alternative types of investments that produce cash flow, what would that amount to? Well, what it amounted to for me was the ability to leave the oil field job. That whole lifestyle I didn't like, being away from home, something I didn't see that was sustainable or long-term. So that's what I did. And the point behind the FIRE movement is, when you have financial independence or financial freedom, whatever you want to call it, time freedom is what I like to call it, it gave me time back. So now I could choose what I want to do with my time. And, hence the brokerage thing and working for a syndication firm and all these things. It was just self-interest. I just wanted to learn that stuff. And I had the ability to just walk away from a job and not worry about, how am I going to pay rent? How am I going to pay my mortgage? I didn't have those worries. And so that's how FIRE played in, and still does to an extent. I'm not nearly as extreme as what I was back then, but yeah, that's how I did it.
Nice. That's great. I'm glad it worked out for you. I'm curious though, my knowledge of the FIRE movement is modest. I don't know all that much about it. I don't know all the details. I know it's very, it's a broad world, even when you get into a relatively small movement, as the world is considered. The FIRE movement's not a huge thing out there. True. But my knowledge of it, is, people go after, buy the S&P 500, live below your means. Like you said, make the money that you can, but max out your 401k. It's a lot of the fairly vanilla financial guidance. And from my perspective, it seems like you went your own way with it in a certain way, and obviously to your benefit. So that's great. But any deficiencies of the FIRE movement that you see?
The biggest is what you just pointed out right there. And it's the biggest thing I disagree with. And here's the trouble with it is, a lot of people are not real estate folks that are in this movement. Okay, they're not professional investors, nor do they necessarily want to even learn investing. Okay, and so that's a huge drawback, because now you're left in the stocks, bonds, and mutual fund land, and you don't really know what you're doing per se, not to be too insulting, but it's just that there's better assets to produce passive income and cash flow than buying a bond that'll give you 1.5%. I mean, there's just better places to put capital. To your point, most people in the FIRE movement will get like a Vanguard S&P 500 index fund with like a 2% dividend yield. And what the idea is that they'll park the majority of their money in something like that, so it's seamless and it's automatic, right? You don't think about it. You don't need to time the markets. You don't need to even watch the market. And so what happens is the idea is, I'll give you the formula that a lot of people use, the 4% rule. I'm sure a lot of your listeners have heard of the 4% rule. It's the traditional financial advice that if you do a 4% withdrawal rate on your paper asset accounts, that you can theoretically, retire. So you take an amount of money and then you times it by 25. Okay, so here, let's run a number. So let's say, I'm pulling out my calculator. Let's say you want $50,000 a year to retire on. So you take 50,000 times 25. It's always 25. That means you need $1.25 million invested. And if you pulled out 4% a year, theoretically you can retire then for the rest of your life on $50,000 per year. That's the formula that they use. But in real estate, you could argue that why 4%? Why not? What if you got 8% cash flow and that's conservative, or 10%? It depends on what you're doing in real estate. But in other words, you can get there a lot quicker, a lot faster, depending on your risk tolerance and method. So
nice. Interesting. Yeah, I think I don't mean to talk too much smack about the FIRE movement. I mean, I own, S&P 500, and I don't think it's a bad thing. I think it's there are a lot of good things in there in terms of automating your investments and psychological, I hate the word hacks, but techniques that we can use to limit our spending and things like that. So there's a lot of great stuff in there, but I think it for a lot of folks it's also not going to really produce the return that we need to become financially independent when we really want to.
Yeah, right. So it's kind of that, I couldn't agree more. And the fact is, like I alluded to earlier, most people aren't going to go pro per se with the investing world, right? Take all the self-education that they need and attend a ton of seminars and webinars and read a ton of books and trial and error and get mentors. I mean, that's a lot. That's a lot. And most people won't do that. And that's completely fine. Just know that, an index fund's just one tool in the shed, maybe like you said, maybe do that, but then maybe have, some single family rentals or some syndications or something else, to kind of supplement cash flow, because you're not really going to get a lot of cash flow off something like that.
Yeah, especially if, at least as we talk, the S&P was just down like 35% 2 weeks ago, and then old Jay Powell turned on the printers and it's back up, but we'll see how long that lasts. Now, we're being a little bit, if everybody will pardon the nerdy reference, but we're being kind of tricksy hobbitses in that you're a passive investor full time, but you're not retired, and you're a young guy. So what are you going to do for the rest of your life? You're working with a syndicator now. And tell us about that experience and what that's been like, why you decided to do that rather than going and sitting on the beach. Like I said at the top of the interview, it's 5 a.m. your time. You're crazy. Who's going to retire and get up at 5 a.m.? So, tell us about what you're doing and what gets you up so early.
You got to love what you do, man. That's what it comes down to. So as you just pointed out, I feel too young to retire. What am I supposed to do? I'm not going to go live in a retirement home. I'm not going to go play golf for the rest of my life. Like, it's just the traditional retirement stuff doesn't apply to me. So instead of being lazy and just sitting around and doing nothing, which I could do, I want to stay active. I want to be proactively giving back. I want to be doing what I can do. And it's not about the money, though. It's just about helping others. What I found most impactful right now in my life is to take something that's that's benefited me, my family, my wife, okay, and to share that model, that strategy, that formula with other people. So I do it a lot at real estate meetups and real estate groups and real estate conferences and speaking events and podcasts like this. I just try to share what I know, what I've seen, happen firsthand in my life that's made the biggest impact. And so that's what led me to Ashcroft Capital. I was already an investor with Ashcroft Capital. They're a great group to work with. In my opinion, there's a lot of things I really enjoy about their business model and their transparency and being conservative and cash flow emphasis and all these things. So that's why, I'm with their team right now. But, life evolves. And so, we'll see 10, 20, 30 years down the road. I don't know. My wife and I love to travel. We could very well end up living in Bali or doing something crazy like that, a few years down the road. So I don't know. But this is where I want to be right now. I know that. And so for anybody listening to me, again, just to reiterate, the point of financial freedom, the point of cash flow, the point of passive income is to have choices. It's to be able to pursue things you love. For some people, that is travel or time with their family, time with their friends, opening a charity, launching a business you could never do before because you didn't have the time. That's what it's about. It's about time freedom. So,
yeah, I mean, it's an awesome goal. I mean, a lot of people, I think many of us want to be able to say, my wife and I could move to Bali if or when we want to, we can and we will. But right now we don't want to. That's fantastic. What's your title of your role with Ashcroft? Just so we know that.
Yeah, I'm the director of investor relations. So mostly what I do is I work with investors, face to face at live events. We have Evan's our other investor relations rep, but he's more like home based. So more, phone based and things like that. So I'm the traveling guy. My wife works for an airline, by the way. So that's why we travel so much.
Awesome. Well, my understanding is the perks of working at the airline are really good, despite, their current economic troubles.
Yep, exactly. Yeah, no, they are. They are. So even internationally, we get to travel pretty inexpensively. So that's we love to travel anyway. So it's a win-win.
Yeah, that's great. So, I think one of the things that's important to point out is we've had, over the last 10, 12 years, one of the best bull markets in real estate and investment opportunities, period.
Yeah.
And it's because we had an enormous crash. So, moving forward, nobody can ever predict the future, right? So I don't want to ask you to do that, but, how do we find the opportunity in the real estate market moving forward? Do we expect it to, continue to be as great as it has been, particularly considering that when we're talking right now, I mean, there are over 10 million people unemployed. What, how can we really project to the future and make the best investments right now? It's a very loaded question. So I'm not asking you to, predict the future necessarily, but give us your thoughts on the best position to be in for the next decade.
Yeah. Well, we're in interesting times, no doubt. And, I think a lot of us knew a recession was coming. We didn't, of course, know it was going to be COVID or anything like that. But, I've been writing blogs now, not a long time, maybe 9 months or something like that. And it's funny because last fall I wrote a blog titled "Investing Through the Next Recession," right before any official signs. That was the least amount of readers I've had on any blog. Unpopular topic, I guess. But I think that we saw it coming. But this is kind of my focus for the last 4 years has been recession resistant investments, not recession proof. Nobody's immune to this kind of stuff, but I didn't want to be in, for example, maybe some speculative stuff or some new development or some whatever. I wanted to be in like affordable housing, some self-storage, ATM machine investing, things that are a little bit, uncorrelated per se to a recession, right? So I still believe in those sectors. I still think those are going to do well long term. We're right in the middle. Like, so what is it? Mid-April. This is the first impacted month of these asset classes to see how rent collections are really unfolding and coming in. And even April is not a true telling sign. We're going to have to get through May, get through June, look at what happens with the government stimulus. There's a lot of factors going on, and how many rounds of that are going to happen. Are we going to be in a deep recession or depression? So I would say, just be patient. Don't, what I keep hearing all the time on all these webinars I'm on, don't catch the falling knife. We don't really know where we're headed right now. So is it time to jump in today? Probably not, so give it a quarter or something at least. We'll see where we stand then, and how things are unfolding. But, look for recession resistant asset classes, always, right? They perform well in good markets. They perform better than other sectors in bad markets. So, does that address your question? That was a bunch of rambling.
Yeah, no, I think so. I mean, really, people throughout this market cycle as well have been saying, XYZ is recession proof or recession resistant. And I think it's Warren Buffett or somebody has a saying that when the tide goes out, you see who's swimming naked. And, these things are going to be tested. I mean, I own a lot of C-class investment real estate. And, one of the big questions we have is whether or not our tenants are going to be able to continue to pay rent, even with unemployment and things like that. And, it's a big concern. And it should be for all of us. But we need to be clear-headed about that.
Yeah, the other saying is that, history doesn't repeat itself, but it rhymes. So, we knew we were going in a recession, but who knew we were going to be locked in our homes? That was unforeseen. And who knew unemployment was going to spike to these levels? That's pretty unprecedented since the Great Recession or Depression. So, we're in uncharted territory for sure. Everybody's going to be tested. And just to clearly paint that picture, it's not solely about the asset class. You can have a great asset, like buy at the right price and have a great tenant base. But what if that asset was parked right next to an airport right now? That's going to be suffering a lot more than, say, a C-class next to a hospital right now. There's big differences in that stuff. So there's a lot of factors between market and the sponsor group and the cash reserves on hand and the debt structure that's been put on it. There's so much. So some folks are going to be shaken out from this, and those deals will resurface and others are going to survive. So too early to tell, but we're all kind of holding our breath.
Yeah, absolutely. So right now we're going to take a quick break for our sponsor. All right, Travis, I've got 3 questions I ask every guest on the show. Are you ready?
I'm ready. Let's do this.
All right. First one, what is the best investment you ever made other than in your education?
Okay. Yeah. I bought a single family home out in Colorado when I was doing that back in the day. And it was a condo that was bank owned. I got a heck of a deal. I think I paid $97,000 for it. And 2 years later sold it for $215,000 and didn't do anything to it except rent it out for cash flow.
Jeez, talk about the best investment. That's great. On the other side of that, we had the best investment. Now we have the worst investment. What is the worst investment that you ever made?
Yeah, so I've got about 80% of my portfolio in apartments and value add stuff. And then 20% is kind of experimental. So I did this investment out of this investment group that I'm in. It was a distressed debt fund. And I guess the key takeaway is don't invest in things you don't understand, because I understood it to an extent, but there was a lot of moving parts and a lot of moving players. And I put about, $150K into this investment between 2 funds. Part of that fund ended up being a Ponzi scheme. So it wasn't the people I invested with. It wasn't the people that I vetted. It was just a partner of a partner, in a different state, blah, blah, blah. And so I don't know. I ended up, so far, I've lost 50, maybe 60 grand. It's probably going to amount to more now that we're in this unemployment recession. But anyway, that was that.
Ouch.
Yeah, definitely.
Wow. Yeah, I've been in a situation where one of the partners, not the guy I vetted, all that. One of the partners was committing fraud, and like, well, shoot. I mean, we still made money, but it hurts to learn that. My favorite question here at the end of the show is, what is the most important lesson that you've learned in business and investing?
Being an advocate for self-education, just continuously learning. I don't know how to really phrase it, but for everybody that's different. It can be podcasts, it can be YouTube videos that are teaching you something. It could be reading books, finding a mentor. You just got to keep learning. Things evolve, things change. Markets change. You got to just stay on top of this stuff to an extent. And I think above all, especially in 2015, man, anybody listening, go read 52 books in 1 year, and I promise your life will change. But to not be so extreme, read 3 books a year. That's more than I think the average person. So
absolutely, it's more than the average person. Now, one of the things, follow-up questions there is, are you reading the physical book? Are you listening to the audio book? Where do you draw the line there?
Yeah, I do both, just because of, the time commitment, right? I understand that sitting down to read a physical book takes physical time, but, I listen to Audible when I'm on flights and when I'm traveling and when I'm in the car and all that kind of stuff. So you can get 2 things done at once.
Nice. Well, Travis, thanks for joining us today. You've had a great run so far, and I'm sure it's going to continue to be an upward trajectory, sharing those lessons and things you learned from the FIRE movement, becoming a full-time passive investor, and now working with Ashcroft. That's fantastic. For folks who want to get in touch with you later, where can they find you and get in touch?
Yeah, the best way is probably email. So travis@ashcroftcapital.com. I'm also on Bigger Pockets and LinkedIn and Facebook and Instagram and all that kind of stuff. So reach out.
Nice. Fantastic. Well, thanks again for joining us. To everybody out there, thank you for tuning in. If you're enjoying the show, please leave us a rating or review on Apple Podcasts. It's very much appreciated. It helps other people learn about the show. If you know anyone who could use a little bit more passive wealth in their lives, please share the show with them and bring them into the tribe. Thanks for tuning in once again. I hope you're doing well out there throughout this pandemic craziness. We'll talk to you on the next episode.